You know him. You love him. Billy Halick's back on the G.L.O show. Mortgage information and so much more. So Billy, my law practice focuses a lot on real estate.
Right.
And for my office, we had an incredible December, then a terrible January. February was better, March was okay, but it seems like April is going to be the best month we've ever had. I'm wondering if the mortgage industry is kind of tracking that same trend.
Well, lately what's going on is there was pending home sales index came out today.
Mm-hmm.
It was up 3.4%. Which was the biggest gain since 2011.
Okay.
So, but that's pending home sales.
Right.
Okay, so then existing home sales, I believe, for March were actually 0.2% less than they were last year, and it was down overall. So it kind of ties into exactly what you're saying. I think a lot of that has to do with how bad the weather was. I mean, at least in the Northeast, maybe not in the West and the South, but in the Northeast, I mean, this winter was tremendous in terms of keeping buyers on the sidelines.
Yeah. I mean, it seemed like nobody wanted to go out and trudge through the snow. It seemed like this winter didn't end, and all of a sudden it's summer, right? I mean, we had no spring.
We have a spring. No, I feel like we have a spring right now. I don't know how long it's going to last.
Today
was kind of springy. It was nice, but again, the numbers point to what could be maybe a slingshot effect. So we had a down and a down for, let's say, January, February. Even March was pretty slow. However, the pending home sales now, it's coming higher than what most of the economists that were surveyed anticipated. So therefore, that should mean that closed home sales in the next couple months should be higher. Again, we won't know until we actually look at the data backwards and see what actually did close versus what's just pending right now.
So you predict a strong summer, April, May, June?
It definitely seems like at this point, I think buyers on the sidelines have come out. There's definitely some pent-up demand. Again, we had a relatively strong last spring compared to the previous 4 or 5 years. Everybody was kind of scared on the sidelines. And this year, I think it's a little bit lower than it was last year. That could be tied to the fact that interest rates right now are running about 4.5%, whereas last year, I think rates were more like 3.5%.
Right.
So we have a little bit of a higher interest rate. We also have, what do you call it? The existing price of houses has risen about, I want to say about 10 to 12%.
Wow.
So you have, prices rising about 12% with interest rates rising.
Small increase.
Small increase, but someone who's doing the math is now looking at it going, gee, I could have bought this house last year for possibly 10% less and had a mortgage that was 1% less, so their payments would have been less. Again, what are you going to do? If you wait in the silence and don't make a move,
to me that's scaring people that if I don't get in now, next year, house prices are going to be another 10% higher, and interest rates are going to be 5.5%, and then I'm really going to be out of luck.
This is a potential thing. I think we're going to see pricing cooling off, but I also think it's there's no true national real estate market. It's very much fragmented little markets, little segments. There's pockets of activity. Certain towns and certain states are tremendously hot, whereas other places are not hot and they have declining values. So again, it's all averages over the course of the year. We'll see. I think you're gonna have prices kind of stable or cool, not cooling, but kind of steady, and rates will continue to slowly rise.
I'm feeling a stabilization in the market. Please tell me I'm right.
Yeah, I would agree with that. We do definitely need, as an economy, we need to see some wage gains. I know there is some, the economic data has been pretty conflicting, even still today. But this pending home sales data, that's good news, I think.
One thing that I've been saying time and time again is that we've got a disparity in the market. We have got a large amount of properties available, but not a lot of premium properties. When I say premium, I'm not even talking about location. I'm talking about properties who've been rehabbed or just kept in good shape. Over the last 5 or 6 years, they've been ignored. People have not poured money into the houses. People have not even kept up their houses because they've fallen out of love with the American dream.
Right. Home ownership rates are definitely down compared to at the peak. They're still relatively high, but they've definitely been declining a bit. There's even talk of a new American dream that doesn't really include real estate, owning it. The younger generation wants to rent. They don't want to own cars. They spend a lot more time, in my opinion, online. So that is definitely something to be keeping an eye on in terms of a macro type thing.
Might be an opportunity for being a landlord.
Absolutely. That's the other side of the coin. As an investor, These kids that are coming through aren't really looking to own. So if you pick up the properties, you know, you're going to be able to have quality tenants that are going to want to, you know, keep the properties in decent shape.
And maybe that means renting one-family homes as well.
If you can make the numbers work, you got to keep an eye on taxes, especially in the Northeast. But yeah, that's a definite possibility for sure.
At least around here in northern New Jersey, it's been impossible to rent a one-family home and make it cash flow, make it feasible for that real estate investor. But if you are correct, and we'll track this, if there are more people who have a job, who maybe are married and have kids, maybe who were originally entering into that market as that first-time home buyer, if they choose to rent, I'll be glad to be their landlord.
Absolutely. It's a good place to be as an investor. A couple things on the investor front. We have a lender now that's allowing us to put down, I believe it's 15% on an investment property instead of the typical 20%. It's been 20% tight guidelines for quite some time now.
Absolutely.
So 5% move in favor of the investor is always nice.
And I absolutely, positively believe, and I've said this time and time again in the show, that now is the time to be loading up on these cash flow positive properties. And I would not allow a mortgage guideline to stand in my way of continuing to buy.
Correct. I mean, if the numbers make sense, there's no reason not to take advantage of the market as it stands today. Another thing that we have that's pretty interesting is an FHA 203K rehab loan for a mixed-use property.
Okay.
So that's kind of an interesting investor-friendly type of product. Again, it would have to be owner-occupied, so it's going to have to be somebody, maybe a young investor who's just getting his feet wet. Talking about the guy that's just getting into the pool.
Right.
This is a perfect loan for him or her. They can buy the property 3.5% down and then use the bank's money to rehabilitate the property upstairs, which would be the residential piece. And it would keep you can't use the money for the commercial piece. So
do you need to owner-occupy the top?
You do. So for your typical investor who already owns 10 properties, it's not going to work.
Right.
But for one of these newbies on the sidelines that wants to get in the pool, what a great way to buy a piece of property that happens to be a mixed-use or commercial type property.
So a mentor of mine, Bob G.L.O, he's a broker. He teaches brokers classes. One of the first things he said to me when I was taking my real estate class years ago is that the fastest and easiest way into the investment business is by buying a 2 or 3 family, owner-occupying it, putting that 3.5% down. A year later, move out and buy the next property. You now have a 3.5% down with a great interest rate on a cash flow positive property.
Exactly, especially if you can buy it right. I mean, that's the key. That's why you got to come to the meetings and talk to the wholesale guys and find a way to get that property at a low price. Because if you do that and it's an investment property, you can actually be cash flow positive, and that's the way you're supposed to do it.
The secret to being cash flow positive: 1, getting a low price; 2, obtaining low financing. You can't make it work without those 2 things. Excellent. All right. Well, I want to thank you again for keep on delivering some really great information for us.
Pleasure to be here.
Great, Billy. Thank you for watching my video. I need you to forward this to a friend. Help us expand our network. Together, we can all grow stronger. Let's share the information so that we can all be more successful real estate investors.